Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of July 15th. Well, last week we saw some very market-friendly news. We saw some key readings that suggested that inflation is slowing. This in turn makes it more likely that the Fed cuts interest rates. So with the Fed on our side, this is great for the financial markets. This suggests, for example, lower borrowing costs. Another potential market driver is corporate earnings. And there's the old adage, earnings drive stock prices. And you see here, for example, the light blue line is corporate earnings and the purple line is the S&P 500. And you see that the stock market tends to follow earnings fairly closely. So with that said, second quarter earnings season began last week with banks releasing earnings. And the earnings season usually starts pretty slowly, but this quarter it's going to build up pretty fast, pretty quickly. For example, on August 1st, we are going to see 250 companies release earnings in one single day. So looking at potential second quarter earnings, we do have some concerns. The economy is slowing fairly quickly, and slower economic growth usually equates to lower earnings. You see here, for example, the City Economic Surprise Index, and this is an indicator that tracks if data is missing expectations or data is coming in better than expectations. So for example, if an economic report misses expectations, the line goes down. If a data point beats expectations, the line rises. This line has been falling fast since the beginning of Q2. This is likely going to impact second quarter earnings. Analysts have been revising estimates already. You see here, for example, we grabbed some data from our friends over at Bespoke. This shows the changes in earnings estimates relative to where they were 3 months ago. 8 out of 11 sectors are lower, except for consumer discretionary, energy, and healthcare. Interestingly enough, 2 sectors that have been leading the markets all year, technology and communication services, have been revised down 6.5% and 15.1% respectively over the last 3 months. And then lastly, markets are anticipating better earnings. You see here, for example, the S&P 500 is up almost 18% year to date. So the big takeaway this week is that the earnings season begins this week. Earnings drive stock prices, but a slowing economy is going to start impacting earnings. The markets seem to be ignoring this fact to an extent. As earnings reports come out, something to watch in terms of, are high earnings expectations, are they going to materialize, or will they fail to materialize? If they do fail to materialize, this could put a damper on stocks. Thank you for listening. For more information, please follow us on X at Cetera IM. See you next week. Thank you so much.